These shares just dropped and that makes them a buy. Well, it's that time of the year again, BTS time. No, not that one. I'm talking about the other BTS, back to school. And this week, I want to open the Trapper Keeper on my favorite BTS play. Do kids still use Trapper Keepers? Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Time is passing quickly in 2021. I mean, it's hard to believe BTS season is here, but this opportunity we're zeroing in on today can't wait for the summer to end. The Children's Place, ticker symbol PLCE, is the largest pure play children's apparel retailer in North America. It currently operates more than 708 stores in Canada, Puerto Rico, and the US, not to mention, which I'll get to in a moment, its online presence. Now, a few years ago, the company had more than 1,000 retail locations, but it's been trimming the fat, closing 491 stores. This really accelerated during the pandemic as it launched its strategic plan of closing 300 locations in 20 months and plans to shutter an additional 81 this year to meet that goal. The reason is, like most retailers, the Children's Place is shifting to a more online presence, but this really isn't hurting growth. In the second quarter, revenue jumped more than 12% to $414 million. This was driven by strong BTS demand that really accelerated in those final 2 weeks of July, which gives us a great outlook for the rest of the year. What I also really like is that the portion of the company's net sales from digital has increased dramatically. For example, like in the second quarter of 2020, digital accounted for 29% of sales. In this year's second quarter, which is just reported, that rose to 43%. So we're well on our way to Children's Place goal of 50% of sales coming via e-commerce. And when we look at mobile devices already, 70% of those online sales are coming from mobile devices. Now, few companies are bulletproof. We are bulletproof. And shares of the kids apparel retailer did drop on this second quarter report. The reason is it completely crushed earnings expectations. It's topped the consensus by more than 200%, but it was a little light on the revenue side, though a lot of the estimates were kind of all over the map. Personally, if you don't own Children's Place shares, I think this setup, this drop is smooth like butter. Smooth like butter. Shares just pulled back from their 52-week high of $107.33, which was set on August 16th, which was Monday. BTS season is here, as well as the holiday shopping season is on the horizon. That means we're entering Children's Place's busiest time of the year. And in the third quarter and fourth quarter, revenue is projected to top $500 million apiece. That's dynamite. Well, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.